And
Yeah.
I know you're busy preparing corporate returns, but I need you to talk to me about some strategies when it comes to individual tax returns.
Sure. So there's a few things we can do. For one, if you had the unemployment compensation last year, be sure to hold off on your tax filings. The Congress and just passed the new bill, as you probably have heard. It will take some time to trickle through the IRS and through the tax software before we can actually file those returns. But the first 10,200 of unemployment per person, per taxpayer, basically, will be excluded from taxation. So that's one benefit worth waiting for.
Well, the ink hasn't dried just yet.
It hasn't just yet, but no, we definitely tell people to hold off. Another thing to be aware of is if your income has increased drastically in 2020 versus 2019, if you qualified for the stimulus payments under your 2019 income, we suggest to hold off on filing your 2020 taxes until you have received your third stimulus payment. It's expected to come in at the end of March, so hold off on filing your tax return if your income has increased in 2020. Now, another thing that people have been able to claim is doing a merit filing jointly versus separately analysis. And what's happening there is if you have one spouse that's making most of the income and there's, let's say, children involved, you can have them filing separately. Now, what you can do is if the spouse with the small amount of income is claiming the children, they can get all the stimulus payments, they can get the additional increased dependent care credits and child care credits. Dependent child tax credits. And basically, so they can really cash in on that portion while the other spouse is claiming separately. So both are filing MFS. However, something to keep in mind, there will be a trade-off because now there's a penalty. Basically, it costs you more in taxes to file MFS, so you have to see which outweighs the filing separately and getting the stimulus payments, or filing jointly and not getting those payments. And basically there, for merit filing separate, things like itemized deductions, your mortgage interest, your taxes get split. So you only get to deduct instead of 10,000 tax, you only get to deduct 5,000 on your tax return. So you're losing some of that deduction, but if you're not itemizing, then you're not losing it. You're just getting half of your 24,400 standard deduction, and that makes sense in that case to do that. So that's just a scenario to run through. It might cost you a little bit more in accounting time to prepare, but it might save you a good amount of money from getting those additional payments coming in from the government.
Great point. Yeah, so you always got to factor in the accounting cost. That might sometimes not be worth it. Yeah.
Right, because doing an MFS analysis will be at least an additional hour of time.
Awesome. Well, great info.
Sure.
Thanks for sharing, and we'll see if we
save you money.
Exactly, and we'll see if we can come up with any other strategies along the way.
All right.
All right.
You got it. Now back to filing taxes.
Yeah, corporate taxes.
Yes.